Hello, everyone. Thanks so much for joining us today. My name is Dani Berger. I anchor Bloomberg's morning show in Europe, Bloomberg Daybreak, and I am really thrilled about the conversation we're going to have this morning. Joining me is Philip Belamant, who is the founder and CEO of Zilch, which is a buy now, pay later firm. Philip, first off, thanks so much for joining. And perhaps the best way to start are for those who maybe aren't familiar with Zilch itself. What is the offering from Zilch that, say, differs from a Klarna or some of these other buy now, pay later services?
Thanks for having me on the show, Dani. It's great to be here. So to answer that question, really what you've got to do is I've got to talk a little bit through traditional BNPL. So if you look at traditional BNPL, basically the model, every incumbent in the market pretty much does this the same way. They'll go and sign deals with retailers, integrate to the retailer's platform, and the retailer on-sells them to the customer. So the BNPL provider's customer is actually the retailer, not the end consumer, interestingly enough. With Zilch, we're doing things a little bit differently. So whilst these incumbents have built these sort of network effects in that they integrate one by one with retailers and they have this closed loop system, we are disintermediating that by actually going direct to the consumer, similar to what you saw Zoom do to something like Skype. If you can actually go direct to the consumer and provide a better service, you can grow much faster. And so what Zilch really is it's an over-the-top buy now, pay later providing business. And what that means is that our customer is actually the end consumer. So similar to what you saw with Amazon in the early days, really, they built this delivery infrastructure, which was pretty phenomenal. And on top of that, we're delivering books. But if you think about what they could have done, they could have taken that delivery logistics infrastructure and sold it to one bookstore one at a time, integrated it with that bookstore and said, if your customer wants to buy a book, we'll show it to them online and ship it to them for you, similar to a Klarna, etc. But they didn't do that. They went direct to the customer, and that's why they are Amazon. Otherwise, they most likely would have become a logistics business, a commodity. And so with Zilch, we just don't like the traditional model. We feel it's becoming commoditized, and it's a bit of a race to zero. We prefer going direct to the customer and really offering our customers the best option to buy now, pay later anywhere they like, online, offline, tap and pay over time, Amazon, eBay, wherever they want to go, we'll provide that to them. And we form this relationship with the customer, which allows us obviously to have a more meaningful relationship moving forward. And of course, we can provide more meaningful services to those customers.
Well, it's really interesting the way you frame it, because buy now, pay later itself was almost this fintech disruption to perhaps a credit card type model or other types of loans. And then you're describing coming in and being a disruption to the buy now, pay later space itself. How much room and how receptive have consumers been to a change and a disruption in this industry?
Yeah, it's interesting you say it this way, and a few people have referred to the model we have as sort of buy now, pay later 2.0. And, I think the reality is our business is very new. We started the business at the back end of 2018. And so we had the benefit of hindsight. We could obviously go and see what others had done and what we think they did really well. And of course, what we think they didn't do so well. And so, we've built our business on the latest technology and of course, the latest regulation. We're a fully regulated company, which is really important, very topical right now. And so, I think to give you a sense, Dani, on how the market sees this is we've gone from 0 to over 1.1 million customers in just under 13 months. It's faster than you would have seen any of the incumbents actually manage to achieve this. Even some of these amazing neobanks we're seeing, we've done this faster than them too. So what we're certainly seeing is that right now, this is resonating with the customer base, and it's certainly growing very fast. We've grown, more than 8 times since our last round of funding, which was in March this year. So significant growth.
Well, let me piggyback off of that, both the idea of growth and regulation, because often just sort of in the tech space in general, when things are growing really fast, there always seems to be this criticism of governments aren't acting fast enough to regulate to keep up with that. And certainly that's something we hear in the fintech space as well. How does that relate to BNPL? Has regulation kept up? Is there enough regulation, or is it fine as it is now?
I mean, what you typically would see is with innovation happening as fast as it does these days in tech, regulation by nature has to be at a bit of a lag because unfortunately, it takes some time to get regulation changed. What we have seen certainly in the UK, which has been fantastic, is we went through the sandbox process with the FCA, very forward thinking. And so we really did have a very long conversation with the FCA as we were setting the business up. Of course, subsequently, with the boom of buy now, pay later providers and all of the incarnations of buy now, pay later, the regulator is having to look at this more closely. And with that said, naturally, it is lagged, but I do think it's catching up. And what we're all hoping for is that when it does catch up, it's proportionate to what the product really is. So what you wouldn't want to see is the same set of rules applied to BNPL that you maybe had seen in the past to something like, maybe payday lending or, for instance, just traditional credit. They really aren't the same things. So naturally, yes, there is a lag, but I certainly think that the regulation is catching up and will certainly catch up. So for those of us who have, gone and done the work to become regulated and are working with the regulator, I think this is a good thing. It can only offer consumers more protection. And, really the whole point of the service is to give the customer the best experience.
Yeah, and of course, the experience, a lot of it has to do with data collecting and really being able to assess the consumer better than, previous sort of offerings could. One criticism that I have heard, or perhaps criticism is the wrong word, but more likely concern, is that most of the data that a lot of buy now, pay later firms are using don't have a lot of data when it comes to downturns. I mean, we certainly saw during COVID that for the most part, we had healthy consumer balance sheets, at least on the other side. Is that criticism warranted that perhaps buy now, pay later hasn't really been put through the most strict of risk tests?
I would say that, my initial reaction to that is no, it's not warranted. These companies are not being run and led by people who have never seen this movie before. I mean, in our case, for instance, we've operated lending books through the crash and even further back than that. So I think, it's a bit naive to think that these companies are being run by a bunch of 20-year-olds that have never seen, the movie play out. There's definitely a huge amount of in these companies and in their leadership. And really what you have to do is just benchmark its performance right now against other forms of credit. And, if you do that, you'll see very quickly that BNPL performs significantly better than what you would see even in credit card or traditional lending. Just by the makeup of the product, it has inherent consumer protections built into the product. For instance, if you overdue on one single installment, you actually cannot use the product again until you make good on that installment. This is just one good example. Running credit is obviously very different to that. In fact, credit card companies' entire business model is based on lending you money you cannot afford to repay on time so that you revolve. So when a downturn happens, you can imagine that becomes a problem because people are revolving an amount of money they actually can't afford to service. So what happens? They don't repay. With BNPL, it's exactly the opposite model. We make our revenue once off when you check out, and so it's in our interest for you to repay on time every single time. And that's how the whole product is geared. This is why you get real-time notifications. You need to be paying. How can we help you pay? Notice that a lot of credit card providers, they don't do that, right? They just leave you to your own devices and maybe sometimes a little bit hope that you don't pay so they can charge their retrospective fees and interest and ongoing interest. So BNPL, I would say, is actually better geared up for a downturn, frankly, than running credit, that's for sure.
Well, perhaps to that point, the traditional credit card companies are maybe noticing the popularity and usage of the buy now, pay later companies such as yourself. So, we have Goldman Sachs, for example, making an acquisition in the space. PayPal is trying to do this too. How do you compete against the big traditional players? What does it take to sort of make sure that, the money they're able to throw around doesn't mean that they become the dominant force in the market?
That's a complex question to answer. I don't think we've got enough time to get into the full detail. I mean, the high level would be, Dani, that, the reality is these institutions are are the very reason why our young millennial Gen Z customer base are using our products in the first place. And that really comes down to reputation, right? Unfortunately, these running credit type products and these very expensive loans that used to exist and were offered by these institutions some time ago, our customer base has seen that, and they don't trust that these institutions can provide the type of service to them that's got the transparency and the cost that they need. And so the reality is, when you're dealing with the most informed customer the world has ever seen, that's our customer base today. They don't overpay for anything. They don't overpay for a meal or a trip, travel, nothing, right? So they're not going to overpay for credit. And I think the problem that your traditional institutions will face, one is really building trust with a customer base that long since has stopped trusting them. And then after that, how is this provider actually going to offer the service? I think one misconception that we're seeing in the market is that BNPL is a feature. And that's just completely incorrect. And maybe if I can, I'll draw a parallel. There's about 15 different APIs I could name to you right now that would allow us to plug in the ability for our customers to buy or sell equities right now in our app. And at the same time, if we had to go and offer this, or if you've seen neobanks offer this, the penetration or uptake of the customer base on this service is sometimes less than 5%. So then why is it that apps like Robinhood, can have up to $300,000 in a day just doing equities? And the answer is because Robinhood, as an example, is a product. It's not a feature. And that's the real trick here with BNPL. It only takes 3 or 4 minutes of playing around with an app like Zilch for you to realize that it's so much more than knowing how to divide a number into 3 or 4. It's a little bit funny when you see these announcements where people are saying, we're going to have a toggle and we're going to divide, your next purchase in 3. It's as though someone's discovered, the divide by sign on the keyboard. It's not quite as simple as that. Because very soon those institutions might realize that, in Europe particularly, they're making 20 bips of interchange, and how else are they going to fund the average bad debt losses and cost? So, so for me, buy now, pay later really needs to be presented to the customer as an all-encompassing product. How are you going to bring them different deals, discounts, merchants? How are you going to make your revenue, and how do you add value to the retailers? And that's really what BNPL is all about. So, for me, I think competition is always welcome, mostly because the consumer wins. The more choice the consumer has, the better. And there's a huge amount of room for everyone in the space. BNPL penetration is only about 4%. So we've got so much runway ahead of us right now. There's more than enough room for a number of fantastic providers, and that will better serve the customers. So, that's always welcome. But I think there may be a few institutions looking at this and being slightly naive in how they think this may play out.
Well, let's talk a little bit about that runway and where BNPL goes from here. Kind of the traditional way that you think about it is, I'm, buying clothes, or I'm doing some sort of really large online purchase. I know we talked a bit earlier before this program about some differing trends. I mean, what kind of is the future for BNPL? For example, am I going to start using it at brick and mortar all the time?
Absolutely. I mean, we see this going that way exactly as you've just mentioned. So for us as Zilch, we've recently launched our product, which is tap and pay over time. This was launched about 3 months back. And this is already 35% of our underlying sales in a day. It's only been around for 3 months. And so people are physically walking into brick and mortar stores and able to Apple Pay, Samsung Pay, Google Pay, Fitbit Pay over time, anywhere they like, which is pretty phenomenal. And again, it's just this ease of use. So how can we make the customer's life more easy wherever they are and for whatever it is that they're purchasing? And with Zilch, of course, the customer can tap and pay over time. They can pick up the app and change their minds and pay that all back all in one go for free and get cashbacks or deals, and the other way around too. So absolutely, I think, where we're headed here is how can you provide the customer the best way to pay, the most flexibility in the simplest form? And certainly we'll see more of that. The one other comment I wanted to make, Dani, and you mentioned large purchases. Interestingly enough, what we are seeing up and coming is actually this groundswell well in non-discretionary purchases. So, it's all about cash flow management. This is not, customers are not using the product because they can't afford what they're buying. If we look at most of our customer base, they're actually making use of the product because they want to manage the cash flow in their day-to-day lives. And so if you find someone, for instance, that's maybe a single parent and they're doing 2 grocery shops a week because cash flow-wise that suits them, now you have this person able to go and do 1 larger shop a week, for instance, and pay over the next, 42 days, which is fantastic. So it's not necessarily the larger purchases only. It's definitely moving towards what you've just suggested, and that's both in-store and offline. And of course, offline is still 70% of all retail. So everyone's talking e-com, but we're seeing our major growth in offline.
Philip, we only have about a minute left, but before I let you go, in terms of what everyone's talking about, we are at the Financial Innovation Summit, so crypto is obviously something that's come up quite a bit. What does the future look like in terms of BNPL and crypto? Is there any future there together?
Absolutely. And, at Zilch, we're already working on an initiative here. So our view is that we're providing our customer the easiest way, the best way to pay over time wherever they like. And that needs to include a funding mechanism of their choosing. And that doesn't always have to be fiat. So if I'm a customer and I want to use my Bitcoin to pay over time at my next checkout, or whether that's a stable coin makes a bit more sense for me, then that's what I want to do. And if I want to use loyalty points, etc., that's something that I as a customer want to do, and we're busy working on services like this as we speak. So the idea is really that, I think crypto is definitely going to make up a lot more of how we go on and transact, not just as customers on services like Zilch, which is something we're going to be talking about early next year and are already working on, but we also see this B2B naturally as well. So for instance, how are we clearing and settling retailers, and could we not rather be doing that either with blockchain or crypto than fiat? And that's certainly something we're all looking at.
Well, that's probably a great place to leave it at. Unfortunately, we're out of time. Philip, thank you so much for joining, and thank you everyone for listening. Again, this was Philip Belamant, founder and CEO of Zilch.